Hey everybody, welcome back to the Viking Trader channel. I thought I'd share a video with you going over my chart setup and the tools that I use. So I like to use the software from Trade ATS. Actually been using it for probably over 10 years now. Works great, but that's what helps me navigate the markets. It's kind of like my compass. Shows me where to go, where to enter, and where to exit trades. So it just kind of makes the charts look like manageable. So let's bring it up here so we can take a look. All right, so I have here on the left, this is our entry time frame, trading the 5-minute, and we're looking at the dollar yen. Then over here on the right, we have our 4-hour chart, which is our higher time frame. So we always want our entry and our higher time frame to be in alignment, because that represents more high probability trades going in the direction you want it to go. Now over here on our 5-minute chart, each one of these little candles represents price, 5 minutes, price moving. And then on the 4-hour, same thing, each candle represents price moving 4 hours. Now when you're looking at these two charts, it's hard to make heads or tails of it, kind of like a different language. But that's why we have the software to clean everything up, to give us a clear direction on where to go. So I'm going to switch it over here. So same exact two charts, 5-minute entry and the 4-hour higher time frame, except now we have our indicators on here. Okay, so the first thing, probably one of the most important things, is this little white line right here. This is our expansion line or fair market value, which means this is where price likes to be. It's always drawn to. Now the next thing we want to see are boxes. So this is a red box. We have a gray box down here. So all boxes start as gray. So this box right here used to be gray, and a box represents a period of time when the market was in consolidation, which just means price can't make up its mind on where to go. So it just kind of fluctuates in this area. So the software is pretty nice because it identifies those boxes, and you don't want to be trading during those times. So it lets you know when to stay out of trades. Now what will happen is price will break out of a box either direction. So you can see right here, price broke long and made a little high here, and then we started to go short. Now our box does not turn red until one of the candles closes below the box. And you can see we did it on this candle here, and then that's why we have this expansion line here. That's where it started, our fair market value. Now the goal is we always want to enter, we want to buy our asset at a good price. So we don't want to buy it, so if we're trading long, because our 4-hour right here, this white line represents the 4-hour trend line, is long. So we want to look for long trades. So we don't want to buy price when it's all the way up here, because we're paying too much for it. So just like anything, when you're trying to buy a TV, you don't want to buy it at normal price or overpriced. You want to get it on sale. You want to get a good value on it. So that's why if we're looking for a long trade, which means we want the market to go up, we want to buy below this white line, below the fair market value price. So you can see here, we broke short, and price went all the way to this little institutional level line here. Institutional level line is just a line that represents where kind of like the big banks, the big markets, they want to move price to. So a lot of times you'll find that price is very interactive with these lines. It'll oftentimes bounce off and then go in the other direction, because banks will do that to harvest stops. And you can see right here would have been a great place to enter the trade, and we'll see how many pips that would get us. Now we always want to, when we take the trade, our first goal is to get back to fair market value, which is our white line. So that would have been a 51 pip trade. That's a good one, and it did break through. Now we hit this little institutional level line, so this could have been a place where you could exit the trade for 61 pips, or you might be shooting up for this liquidity line up here. So liquidity lines are very similar to institutional levels lines. It represents where people have their stops, where banks like to harvest. So those are those lines. And these little lines you see coming out of a box represents order block projections. It can be where markets like the big banks like to move price to. But the biggest thing, especially when you're first trading, is to use our liquidity lines or institutional level lines. And then you can see here we have another box. This one's gray, and this one stayed gray because it broke out and it never went short confirmed below. So that's why this one's not red. Now this little blue line here, this represents the trend line of the 4-hour. So I like to have that there so I don't have to keep looking over here to see it and see how price interacts with it. I have a nice view right here. And then I also like to have on my charts the trend line on the daily. So this green line represents the daily trend line. So if you would pretend this was the daily chart, it would be like this white line. So me personally, I just like to have that on there as well. So that in a nutshell is how the ATS software works. Now we went through 1 week of trades on our prop firm accounts. I'll have that video up shortly. Maybe after this week only took actually 1 trade. So there wasn't much action until Friday. And that didn't happen until news, so I like to stay out of trades during the news. All right, well, thanks for listening, and I'll see you guys next time.